This is the London Fintech Podcast, brought to you by your host, Mike Ballerman, bridging the worlds of suits and t-shirts, of finance and technology, bringing you insights, stories, and inspiration from the golden age of opportunity and innovation happening in London right now.
Hi, this is Mike Ballerman, and this is London Fintech Podcast, episode 006. On the show today, I'm delighted to welcome John Shaw, Head of R&D and Innovation at Direct Line Group, which covers not just Direct Line, but other group companies such as Churchill and Green Flag. It's especially cool in my mission to bridge the worlds of suits and t-shirts to have someone from the corporate side along. Further to bridging the two worlds, my view of financial services is that it is an activity, not a set of institutions, old or new. Innovation is a process, a state of mind, a vibe. It's crazy to think that innovation is something that only the little guy can do, albeit some big companies become so bureaucratic they inadvertently stamp it out. I recall seeing a great cartoon of this recently, the head of a board meeting saying to those at the table, "Instead of risking anything, let's play it safe by continuing our slow decline into obsolescence." On to John. John is in no danger of becoming obsolescent soon. In the last episode, we discussed the fact that many fintechs understand tech but don't understand marketing. In addition, there's a misconception that marketing is advertising or PR. It's definitely not, though these may be a part. Marketing is the vital process that takes a product and results in a stream of potential buyers who are interested in discussing it, at which point it's handed off to the salesman to convert interest into a client. John is someone who gets marketing with a capital M, and maybe he can share some insights. He's done a number of marketing roles in his time, at Barclaycard, Cato Allen, HSBC, and now at Direct Line, where it has the cherry on the top of innovation. So he's also a rare bird in terms of having covered a wide variety of financial services: consumer banking, private banking, commercial banking, and now insurance. This broad field of vision is rare in the modern, over-siloed world. As is the way of the creative folks, he has a bunch of side interests, including DJing, rowing, cycling, and also wearing yellow shoes. So let's get on with the show. Hi John, thanks for joining me today.
Thanks for coming down to Bromley, Mike. Pleasure to see you.
Yes, it's always a pleasure. When I drove into Bromley, I recalled being at school when Monty Python was quite big, and there's always a lot of talk of the West Bromley Fighting Haddocks. So I guess I must have passed at West Bromley, but I didn't see the Fighting Haddocks.
No, not that I've seen exist around here so far.
Maybe they're retiring with Monty Python. So before we dive into the show, John, what led you to Bromley?
Does anyone start out wanting to go to Bromley?
Presumably people living in Bromley. I mean, for all I know, you've just destroyed my demographic, which could be 99%.
Apologies to people who live in Bromley. I don't know many people who I've spoken to who's kind of left university said, actually, do you know what I want to do? I want to work in insurance. So, I mean, my background is I studied history of art and English.
Okay, so you're basically unemployable.
Well, everyone thought I was going to work in McDonald's. My original thought was to work in an art gallery and do educational tours. But then I got more involved in doing the advertising for a lot of the societies at university. Decided that was a really cool thing, but confused advertising and marketing. So applied for some marketing graduate jobs and got in at Barclaycard. I was very excited given their history with the Rowan Atkinson adverts, and at the time we had Angus Deaton doing his advertisements. Entering there, suddenly found this whole new world where marketing is not advertising, as you said so eloquently in your introduction, and started doing proposition development. And that's been my world ever since. I've done a lot of side roles in product management, in segmentation. But the thing that gets me up in the morning is wanting to see change.
It's not the alarm clock.
Or the other half. No, but
you can tell you're a marketing guy because you're telling me you're waking up in the morning sort of driven by innovation and that, whereas probably half the time suddenly winter is the alarm clock. Just rewinding on some of these things, one of the problems I see with fintech is that there's a lot of knowledge of tech. Sometimes there's a bit of knowledge of fin. If you get some middle-aged fintechers, they understand the fin and the tech. But a lot of the people that I've met have no experience in marketing. They have no experience in proposition development. So can we just sort of rewind to how you learnt about these things?
Okay, so how I learned has always been on the job. And I think I've been lucky enough to work, certainly in my mind, with some of the best people within financial services and learn from them, whether it's the likes of a chap called Ron Boddy at Barclaycard International, who was very, very strong on developing proposition and I guess an overall strategy based on the consumer and how you roll out new businesses to new countries. To Mark Evans at HSBC and here, and then John Garnett, who has never had no background in financial services and did a lot of work at Procter & Gamble, and then Heinz, and then in government think tanks. And having that that kind of outside experience of how to deal with customers and applying it here. I mean, my role's always been in financial services.
Right. So we're picking out an important point here because people understand the difference between banking and insurance, and that there's a huge gulf between the two, although you were telling me that a Direct Line, there are quite a few banking folks around. But in the more B2B end of financial services in the past, in terms of merchant banking and that kind of thing, and I started in fund management, we got no training in marketing or in sales or anything like that. And in fact, the whole vibe in merchant banks was completely against that. The last thing you would want to do was any marketing, my God, or have any sort of image out there, or sales. So one of the stories from before my time is when we set up an office in Tokyo, which I think was the late 60s. The head of the office in Tokyo called back to headquarters and said, "Oh, everyone in Japan has business cards. Can we have a business card?" I said, "No." So anyway, long explanation about looking in Japan, you have to have a business card. Okay, you can put your name on it. Well, I need the name of the company. You can't put the name of the company on, that's advertising. That's the last thing we want to do. Now, this may be, of course, the part of the sort of decline and fall of the merchant banks. But I recall, again, going back to the 1980s in Japan, I used to do, quotes, marketing trips to Tokyo, which was really just sort of what you would call sales, but we're never allowed to use that word. So I think a lot of people with that kind of background, even if they've been in the city for a while, don't have a clear understanding of marketing versus sales. An example of this was when I worked out my current definition of how I see it. I was telling a chum of mine about this, who'd been in the city for 25 years. I said, "Oh, that's fantastic." He said, "I've never understood the difference before." So it's interesting that you think it's natural to go through the city and learn these things, but actually even for sort of people who've been their ages, if you go a different route, you don't actually learn it anyway. So it's not just the young fintechs.
Well, I think within financial services, certainly from my experience, marketing often takes on a very broad role. So it's everything from the proposition design and development and the customer insight work, reactive and proactive customer insight work, right through to your traditional advertising functions, your below the line marketing, so direct mail, online, above the line television advertising, and then PR and the other various assets you have floating around. So you do get an end-to-end sense. Now, often within the banks, the sales part is somewhat split out because you'll have the physical presence of the branches and you'll have a separate department running that. But again, within, when you're doing direct sales, like we are at Direct Line Group, we handle all of that. We're very interested in seeing what the numbers are every week. Because at the end of the day, the website is now the main portal.
Yes. Well, so in a sense, you do have quite an overlap with internet-y businesses who are busy doing their A/B testing. They change something, the numbers come in, and they say, "Oh, that worked." And the same thing is, in companies such as this one, you run a campaign and you go, "Wow, that's fantastic," or "That wasn't," or "It was something in the middle." And you're always running from the data. And I think that's the benefit of doing businesses with large number of transactions. And again, coming back to my prior incarnation, you're really dealing with a very small number of transactions there. So really, you could never actually get any data. "Oh, we won a client in Tokyo this quarter, that's good," but there's not much you can derive from a 0 or a 1.
I went to WPP Stream last year in Turkey, and there was a session there around growth hacking, which I know is a buzzword, particularly in startups. Essentially, since my time in financial services, we've been growth hacking since the early 2000s. It's called managing for value. How do you increase customer retention? How do you increase lifetime value? Not by 10%, but those small percentages, what Team Sky would call the marginal or the aggregated effect of marginal gains. Management for value, in my mind, that's.
And you mean Team Sky in terms of the cycling thing, who didn't do so well in this year's Tour de France?
No, they did not.
No, we'll gloss over that. Was it Dave Brailsford or whatever?
Brailsford,
who at the Olympics was very much into incremental gains. So they took their pillows everywhere because you might get a slightly better sleep with a pillow that you feel comfortable with, etc., and it adds up. Just on this point, because I'm interested in how innovation works in a company. Direct Line has got a very good reputation. I spoke to somebody a month ago who's been in insurance for 30 years, basically all his life, and knows it in the round. And he said, "Oh yeah, Direct Line," he said, "they're very good." I thought, "Oh, interested." So I made a note of that. So a company like Direct Line have, in a sense, been formed out of innovation in the first place. It's not like some company that's been sort of carrying on for 200 years who's sort of making incremental changes. So moving on to the innovation thing and your innovation hat here, as well as the marketing and the proposition development, how does it work innovating in a company like this?
Having just spoken about marginal gain, I think typically within most financial services companies, you'll have, let's say, 99% of resource looking at the marginal gains. What we're trying to do within Direct Line Group now is...
By which you mean, how do we increase sales by 1% or 5% or 10%?
So, another way of looking at it potentially is change, fix, run.
Okay,
so
you've explain that.
So you have a lot of people you need just to run the business.
Yeah.
Okay, and then you have a chunk of people who are there to change the business, and then fix the business. And the fix is where a lot of the marginal gains will come from.
Right.
So we fix this, we'll optimize it a little bit more.
Okay, fix and as repair.
Yeah, and then the people, it's passed on to the people who are running things.
You've moved on from banking, John, because the word fix you have to be very careful of, because people are always fixing LIBOR and fixing a bunch of things and fixing FX rates they shouldn't have fixed.
Not price fixing. No. If we can fix this customer experience, we can tweak this customer experience.
Yeah.
Maybe tweak is a better term. If you've got most of the business doing that, I guess the fear is, from our point of view, that something big will come along and we potentially miss it.
Yeah.
So we now have a small team, which I lead, looking at the future.
Yeah.
And what are the big things that will change consumer behaviours?
Yeah.
What are the big threats to our traditional business models?
Yeah.
And how do we experiment with those and potentially not get a 1% gain or 0.5%, maybe a 5-10%.
Yeah.
The big disruptive ideas, whether it's around business model, whether it's around new ways of creating insurance, of selling insurance, new types of insurance. That's what we're interested in.
So that's a good summary. So basically you guys are structured to do, again, different language, but business as usual, and then some changes to business as usual, and then you've got a bunch of sort of blue sky thinkers in yellow shoes going, "Ooh, how can we do it completely differently?"
I wouldn't say blue sky thinkers, because often that term...
Well, it's very grey sky in Bromley, but
That's
traditional.
No comments. I think that often evokes the thought that their role is just to sit there and think.
Yeah, rather than deliver something.
Yeah, and I think that's the big difference, because again, my experience within financial services has shown companies don't lack good ideas for the future, but they often lack the knowledge about how to explore them and experiment with them. And that's what we're trying to implement at the moment, that rigor to prototype first, and then if it works, then you explore how to industrialise it.
No, that's fantastic, because I've seen the point, and it always does my head in, I've seen the point made, normally by 20-something journalists, that the problem in financial services is a lack of innovation, which to me is completely crazy. Having joined the city in 1985, for almost every year you've seen massive innovation. You've seen more innovation in financial services than anything else. And if anything, I would say, given the problems that we've had, a lot of these problems have been caused by excess innovation. Derivatives being a prime example in America. You couldn't have blown up America using derivatives when I joined the city in 85 because they didn't really exist.
True.
So there's been a lot of innovation. We don't know how to control it. The governments have given up on capitalism, i.e., that company had an experiment, it's just blown itself up. Let's build another company there. No, they got bailed out. And instead, we're trying to control it by massively bureaucratic rules. A simple example I read about recently is the Volcker rule in America, where they're trying to sort of ring fence this risky, nasty, toxic-y investment banking stuff. And Paul Volcker, the ex-head of the Fed, said it would work if you could stick it on a page of A4. Well, surprise, surprise, by now it's hundreds and hundreds of pages. At which point it's just full of loopholes and everyone's trying to arbitrage it.
Certainly within retail banking, I think actually often we've looked at regulation as protecting us from innovation, or certainly external innovation. It's very hard for a new bank,
absolutely,
or a new insurer, but less so for a new insurer. Look, the last 20 years, even 10 years, we've had Virgin Money come along, and we've had Metro Bank.
But although Metro Bank, Vernon Hill did say, if he knew, going back to the protection that regulation provides the incumbents, which is what is leading to what I believe is corporatism rather than capitalism, Vernon Hill from Metro Bank said that if he'd known how hard it was to create a new bank in the UK, he would not have bothered, which is a bit of an indictment in itself. So coming on to insurance, which you say I think is a different market, and people talk about Fintech, and then before you know it, they're talking about disrupting banking. And when we met, I said to you, I think that's because people hate banks and they don't hate insurance companies, but you were less sure that there was such a massive difference in terms of
We're lower, we tend to be lower on the things like the Edelman Trust Barometer than banks.
Right.
So I think we're probably in the same realm as solicitors.
Okay, maybe it's the resentment then, because people resent banks because they were forced to bail them out as taxpayers, and then all the bankers pay themselves massive bonuses for losing yet more money. So people might not like insurance companies because of the hassle of dealing with claims or what have you, but we don't actually resent you because we haven't had to pay to keep you going.
Yeah, and it's an odd relationship with your insurer as opposed to your bank, because at the end of the day, you'll be out shopping, you'll pull out your bank card, you'll get sent your statements. If you're not making a claim, essentially there's 1-2 touch points every year. That moment you get your renewal notice.
I'm just trying to think of who my car's insured with, and I have to think quite hard and go, oh yeah, maybe it's them, or did I change last year? And then I have to go back and find the piece of paper. So as you say, as opposed to the bank where I'm using the brand every day, I see it under my nose every time I do something.
And that's, it's a real challenge for it. How do you demonstrate ongoing value to a consumer? It's, I don't walk out of my house every day, even though I work in insurance, and go, do you know what, it's fine if that burns down today because I've got insurance. I don't get in my car and think, if I have a crash, it's fine. Direct Line's covering me. Is there a way of increasing that relevance?
Well, maybe that's a good point, John, to come on to, wearing your innovation hat as you're sitting there, not blue sky thinking, but your sort of feet on the ground, practically trying to work some things forward. I mean, what do you think are the themes of insurance innovation or insurance fintech going forward over the next few years?
There's two things in my mind. A, where are consumers moving and what can we pick up on in terms of the trends? And B, what are the threats to the insurance business model itself? And they are intertwined.
So the consumers and the producers. What's going on with the consumers? What's going on with the producers?
And the producers are expanding outside of just traditional insurers. So if you think of insurance as being about three things, you've got the role of selling insurance and running insurance, which we'll call insurance, as a middle box. And on the left, you have prevention. So how can you stop things happening to me in the first place?
So for example, I get house insurance and they say, have you got good locks on your front door? And if so, we'll charge you less, that kind of thing. So you're encouraging the appropriate behaviour in people, which is not just a question of changing the economics, but as you say, it's actually helping the people, because you don't want to walk out your house and come back, it's been burgled, even if you are covered.
And then if something does happen, the restitution on the right-hand side, make it so it's not, like nothing's
Sort it out
as quickly as possible. And that's certainly with a lot of the work we're doing at Direct Line Group at the moment, it's around that, because it's a core company, it's the promise of insurance, the key focus. That's why you have insurance.
Absolutely. So, if somebody dies, you've got life insurance, or your house burns down, or someone crashes into your car, then you really want a good service. I must say, as an uneducated, as an uneducated everything actually, but as particularly an uneducated insurance consumer, I probably need to know more than I actually know when I buy insurance. I'd love to see something a bit more like the Amazon reviews or user reviews, which says, these are where they are, and actually this company is really good at sorting stuff out and this one isn't. But I don't think I do actually. Maybe it's my failing or
we're doing a lot more work around that. I know our competitors are doing a lot more work around that. The price comparison websites, who are struggling for differentiation at the moment, they're doing a lot more work around that. And we're going to see in the next 6 to 12 months, I think, we call them price comparison websites because they compare price. I think we're seeing the shift. But
there's also quality, you see. So my algorithm, when I go to one of those, and basically, like most people, I'm lazy. It's not a big cost to insure a sort of ancient car for an ancient person, so it's not a big deal. It's like, a couple of £100 or £300, so I'm really not going to spend sort of months trying to get the cheapest one. But every now and then, one of them sort of takes the Michael and sticks the price to the roof. So I look at it again, and my algorithm is simply to look at the sort of cheapest solid name I know in terms of brand. I've never heard of them. They sound dodgy. They've got a stupid name. Oh yeah, Direct Line or Aviva or London Victoria. Oh, I'll have them. They're the cheapest of the brands I know. But that's a very, very simplistic thing, and of course I'm not doing it at all efficiently.
So the price comparison websites, we're actually predicting this at the end of 2012, and it started happening now. We're going to see a shift from price comparison to value comparison. So as they start providing more kind of TripAdvisor style reviews in there, their own assessment of the quality of cover, etc. At the moment, they purely rank on price.
Absolutely.
They'll start allowing consumers to rank more on actually what is important to you. There's a very easy equation for insurance, I think, for consumer value, which is value equals, in there you've got price, brand, level of cover, so does it fit with what you want to cover, and any sort of experience with the brand or any kind of feedback you've had. Bundle all that together and put it to the power of claims. Because if you've never had to make a claim before, price is going to become the overwhelming factor.
Exactly.
If you've had to make a claim, that suddenly becomes the big thing, and that whole experience that drives. I was talking about the 3-box model. If that's insurance, we're seeing threats come in through a lot of the consumer trends, which actually could narrow down our business model substantially. So take the Internet of Things, for example. I know it's another big buzz topic. A lot of people are talking about it.
I'm sure there's lots of conferences and people selling sandwiches
There's
and
loads of stuff, and a lot of the big tech companies like Cisco have put out some great papers, and it's always in Wired. But ultimately,
I haven't seen it yet myself, but I'm a bit of a Luddite.
I started playing around with some things like Twine, for example.
Right, what's one of
so
them?
Twine is a sensor that's one of the biggest funded projects on Kickstarter originally, where it connects with your Wi-Fi, and then you can put some little sensors around your home to tell you various things.
Right.
So when we went away on holiday over Christmas, I blue tacked it to my front door, and basically said, if the magnet or the switch breaks, then send me a text message saying you're being burgled. Because I knew no one should be going in or out. So that was my secondary alarm system.
Okay, I see. Right.
So the Internet of Things is creeping in on the territory of prevention. Because a lot of the time it's objects communicating with each other.
Yeah.
Things like the classic for insurance that we're all talking about at the moment is driverless cars.
Yeah.
It will prevent a lot of things happening. That will change our business model. So Internet of Things, big trend. Then we start looking at things like the quantified self. So this how consumers are starting to curate their own data sets.
Okay, so there's lots of clever buzzwords which people more intelligent than me would understand. So, but just putting it in sort of an idiot's term for me, I've heard of the quantified self, at which point my eyes glaze over and I sort of click the next web page.
Well, before we started recording, you were telling me you rode.
Yeah.
Did you ever keep a training diary?
Excel spreadsheet, absolutely.
There you go. That's the quantified self.
Right.
That's what it is. Except
so it's collecting data about yourself.
Yeah.
Or whatever.
But it's collecting data and then finding insight from that data.
I think, kind of joking apart, I mean, one of the things for people on the sidelines of this stuff is that a lot of examples of these tend to be extreme. So they kind of hit your website views or, all this sort of link bait and that kind of thing. So the obvious example is the Internet of Things. I first came across with this idea of a fridge which got a tablet on the front and it keeps tracking your milk. Oh, wow, that's really wonderful. So, you start off with a kind of, that's not really that interesting. The quantified self, you get all these articles about people who are keeping track of how many times they go to the loo and, what they say to everybody the entire day over their whole life and they leave that to kids. Wow, that's really interesting as well. So somehow the initial things that come out don't completely lack practicality. There's not like something that I thought, oh, wow, that's really fantastic. I must get one of those kind of thing.
There are more practical examples out there. So I think,
Well, I think we're starting to get there, aren't we?
Objects like Lockitron in the Internet of Things.
Right.
So it's an American-based company. It's a smart door lock.
Right.
Now, actually, you may think, what's the point in having a smart door lock? But
someone could hack it.
there's always...
We're going to break the lock anyway, I guess.
With any tech, there's always the danger of hack. But look at the benefits. If you have some friends coming round and you're stuck at work, you can give them a temporary access code so they can get in. Yeah. You've got this constant record. You never have to think about remembering your keys and getting locked out. So you haven't got the locksmith. There's all these different benefits.
So basically, there's a lot of stuff which early adopters like yourself are tinkering around with. It hasn't really started to hit anywhere near the middle market, a lot of these things. But what you're saying is coming back to the insurance point, and one of your trends you're seeing is the Internet of Things. This has potential for disrupting insurance. So, for example, a practical example, just simplified, is the quantified self is that, Mike submits his heart rate monitor or something about his rowing machine. He's been quite fit last year. We can lower his life insurance premiums or something. But there's some real data there, as opposed to me turning up to the doctor and say, I go to the gym every day, at least several times.
Yeah, so
for months.
Use it. So obviously the big example within the current world of insurance is motor telematics. So taking driving data
and again,
applying pricing.
going away from technical terms. So telematics is just again concrete, real data.
Yeah, telematics simply means the transfer of data over a long distance.
So you stick a box in my car and you find out that I'm a law-abiding citizen and I never go above 69.5 miles an hour and you reduce my premiums or something like that. That was the general idea.
Essentially,
yeah. So and that is, again, getting away from all the detail, that is really coming back to more accurately pricing the risk in the individual transaction rather than the gross thing, his car's 15 years old, he lives here by the postcode, and you do the best you can. With this, you can actually price it better.
We can price more accurately, and so it's particularly helping young drivers.
Yeah.
The other three things to think about. So there's two minor ones, and then there's one big one. So smart community. So get insurance started as a community product, and we're seeing
mutuals.
Yes, and we're seeing in other sectors communities start springing up and managing things themselves. We started seeing it And I know a lot of insurers looking at this at the moment. And, you know, there's been a lot of talk around peer-to-peer insurance. We've seen some great examples from Germany, bought by many.
So just to be clear, so peer-to-peer insurance would be a group of folks get just fed up with insurance companies or think it's too expensive, so they all kind of pool in themselves.
Yeah.
So, you know, you and a dozen mates get together and say, iPhone insurance is really expensive. Do you know what? We'll put £10 in the kitty. When anyone loses it or breaks it, they can take it out.
Yeah, it's the best example of mutual insurance. There was a group in Paris and Lille called the Mutuelle de Fraudeurs. The French government were getting sick of people skipping metro fees,
right.
skipping the metro fares, and so they started putting more people on the barriers. And these guys said, well, this is outrageous. It's our right to be able to go to and fro where we please without having to pay fares, being French. Yeah. So they club together and they put €5 in a month each. And if they got caught jumping the barriers, they take the fine out of the communal pot.
Okay.
Brilliant.
Very French solution.
Yeah. Another one we're seeing more and more of it happening is the move from ownership to usership.
Right.
So, which again has a threat. So take Zipcar. Right. Classic example. Yeah. Okay. Less people in urban environments owning cars and deciding to use something like Zipcar instead. Less people owning physical objects and moving to digital. So different things for us to think about how we protect them.
Yeah, I'm reminded of Bernie Ecclestone, and unfortunately I probably can't say the entire thing, which is stuck in my mind, which he's got the 3 Fs. And he says, if it flies, floats, or something else beginning with F, rent it by the hour. And he's talking about sort of the ownership thing, but really you're talking about the same thing in terms of insurance. So, you know, if I'm going to hire an aeroplane or hire a car, I want to insure it by the hour rather than the entire year. Kind of stuff. And you're getting it also into actually possessions potentially become more transient. Yeah. And the ability to think about how we can replace these items using very new forms of technology. Yeah. And then the final one, and the big one to me, and the one that's going to affect the industry the most, an agency I'm very lucky to work with called the Future Foundation. And they call this the end of inefficiency. Right. And I know I was reading something by a chap called Matt Honan in Wired the other day, and he said, cold efficiency always wins. Okay. And it's true. And if you look at how consumers are acting at the moment, the media tells us that we're all time poor, so we're looking for the simplest, easiest, quickest, most frictionless way of doing things. Yep. And if you look at the insurance journey, on the whole, I would argue, unless consumers are making a claim, they actually probably don't care too much about insurance, or many of them don't. Then they're looking for the simplest way to get their purchase out of the way. Yeah, it's like my car insurance. Simplest way, I'll roll it over, it doesn't seem much difference. It's gone up, gone down, doesn't matter. Yeah. So how do we as Direct Line Group respond to that and make it easy for someone to get their cover? Yeah. And when it comes to them making a claim, if something goes wrong and we've not been able to prevent it happening in the first place, make it as easy and as frictionless as possible for them to claim and get back to where they were. That all sounds very impressive, and I think I'm particularly impressed I'm not spinning it, as I really have never, in mere 30 years in banking, I've never heard that kind of thinking applied to banking. You know, I've never come across, maybe they're starting to be creative, but I haven't come across departments who are sort of sitting there thinking about this kind of stuff in banking. So maybe banking's getting a bit more ossified. So you're looking at the innovation in the insurance market and that kind of stuff. Where do you think, have you seen much activity at all on the producer side of things in terms of disruptive insurance fintechs coming along and changing things radically? So for example, I was at an insurance Disruptors Day recently, and it was organised along very rational lines, looking at the business model canvas, what are all the components that make up the business at the moment, what are the components of that, and in essence you build up a little Lego building, metaphorically speaking, and you say, how can we slightly change the building? And that's a kind of gradual thing. And I was saying that's fine, but then you also need to have something completely different by saying, okay, how can we do it completely differently? A simple example that came to my mind, which you don't get by that kind of how do we tweak the producer or how do we ask the customers whether they want a faster horse or that kind of thing, was that I think it would be really useful if there was a website out there which I could just type the codes of my insurance policies in, and the website gives me a very simple sheet of A4 or less. You're covered 5 times over on your iPhone, but you're not covered on all that recording kit, and actually your house insurance lapsed a month ago, and that travel insurance doesn't cover you for losing your seat. You know, that kind of stuff, because as a consumer of insurance stuff, we get all these papers which you're forced to send out, and there's all sorts of, I've got to read this out to you, sir, and they try and read it out as fast as possible, 3 minutes, because some bureaucrats told them to do it. But actually, I don't really know what I'm covered for. I roughly know I'm covered for the house, But a good example of that was recently there was some leak upstairs, and it all started coming through. And getting through the small print. What's the minimum? What's the excess? What's the premium next year? Oh, can't tell you that, sir. That's a different department. And, all these sort of frustrations start coming in. Anyway, that was a particular example of where if I was trying to disrupt this particular segment of financial services from the outside, I think, okay, let's just do something completely different.
In all honesty...
Is there any of that out there? Or is the industry being sufficiently innovative and creative itself that it's not giving the low-hanging fruit in the way that banking is? Banking charges you 5% to change money between currencies and it takes 3 days. Well, of course, someone wants to do it sort of 10 times cheaper.
So in all honesty, I think the companies I have seen so far tend to focus in on one small area of the business model. So I've seen a number of startups coming in around peer-to-peer insurance, for example. I think maybe inspired by the success of Bought by Many and a lot of the talk that's been going on in the industry around community insurance. My fear is actually insurance, as it stands at the moment, hasn't been disrupted.
Yeah.
I know from Direct Line Group's perspective, we're doing a lot of research to look at actually how do we make the future happen.
You're cannibalising your own business in a sense.
Not necessarily, because go back to I think it's a misquote of Mike Tyson where he said everyone has a plan until they get punched in the face. I would argue the industry, and particularly direct insurers like ourselves, Aviva, etc., have had two punches. The first was the first kind of digital revolution, when purchases started moving online, we were a bit behind. And the second was when the price comparison websites started springing up, and we weren't prepared. And now look at how much business goes through them compared to us.
So the industry as a whole has been forced to get into catch-up mode for the last 5 or 10 years, perhaps. Whereas, just take foreign exchange trading as a prime example. Foreign exchange trading or foreign exchange conversions, banks have been able to get away with charging 5%, 7%, and taking 3 days for ages. And it's only recently that people start to hear of TransferWise or whoever who are doing it 10 times cheaper.
So the question in my mind is, where is the next punch coming from?
Right.
Okay, because the industry is worth a great deal of money.
Yeah.
If you look at it from outside, with a very kind of cold-eyed view, a lot of money to be had. Actually, consumers are prepared to move. You can see the stats. You can see how many price comparison websites. And the view is that a lot of the incumbents, not Direct Line Group, obviously, aren't doing a very good job at actually, selling and making insurance work. I know my colleagues in here are doing some great things that we're about to unleash at the end of August, which will start shifting things forward again and really give us some points of differentiation with the market. My role is to find, what are the next points? And I think that we're going to see the punches not necessarily come from our typical competitors, but from outside. But to your point, I've seen some small kind of bunny punches, rabbit punches, not bunny punches. I've yet to see the big one swinging in yet.
Yes.
There's no bank simple or anything like that has come into insurance.
Absolutely.
So far.
Well, that's quite a good note to wrap up on, John. Time's gone by very quickly. Fascinated to hear, and I hadn't actually thought myself that all this innovation is being driven by the fact that you guys have been forced to react because you've been more of a B2C marketplace for some time, and the internet has changed the C side of it much more. Consumers like me actually get out and do something. And it's just that banking has yet to be affected. I think the other thing that I took away from the insurance disruption day is that a lot of segments of the market don't have as much fat in anyway. A prime example, I was looking at the life insurance stuff, and I said to the guys, it was from Aviva actually, a bunch of nice guys, and I said, look, if I come along and I tell you in a year's time I've got some new startup and I'm doing it 10% cheaper, you'll believe me, won't you? Oh yeah. I said, if I come along in a year's time and tell you I'm doing it 10 times cheaper, which is the example of FX trading, you'll laugh, won't you? You say yes. Because life insurance can't be done 10 times cheaper, Whereas banking transactions can be done 1,000,000 times cheaper if you're prepared to trust the Bitcoin or all this kind of stuff.
I don't know. I mean, it's having looked at things like cognitive computing, etc. There is no reason why you could not start bringing the costs of running companies down significantly.
I'm sure you could, but anyway, the question was, can you bring it down 10 times? Because people live the certain length of time they do, investment returns are the kind of thing they are, so if I insure my life for 10 years, blah, there's quite a lot of arithmetic. Now, of course, all big companies have got to have all these various departments and costs and etc. Anyway, it was just kind of, rightly or wrongly, the same point, that the feeling is that There is, of course, fat in every industry going. Every industry tends towards oligopoly. The fat can always be reduced. Things can change. It's just that somehow the lowest hanging fruit is currently in the banking sector, which is why all the startups are attracted to that, payments.
Yes.
Peer-to-peer lending, that kind of stuff. Whereas the insurers, maybe you've sort of all woken up and you're sort of running a little bit so that the little mammals can't catch up with the larger ones running around. Good. Okay, thanks for that, John. I've convinced myself that I'm more positive about insurance companies than you are.
Well, hopefully I've made you positive about insurance in general, but I mean, it's...
No, but it's because you've made the positive case of insurance, and because it isn't, it's not, I don't think it's a major pain for people. Other than, as you say, around the claim side, and that really comes back to not price comparison sites, but value comparison sites, where you get a price and you get a kind of quality mark,
Yeah, and I know I'm very lucky. This is, from a personal point of view, this is the greatest role in insurance, being able to design the future, and ultimately, coming back to what we were saying earlier, designing it with that customer in mind. Where are they going, and let's follow to make sure that we're there to protect them.
No, absolutely, and I think this brings it all full circle, going back to what I was saying about fintechs. A lot of fintechs start on the tech side. We've got a great idea, we've got a great bit of tech, but that's really about them and their stuff. Whereas, your journey and your career has always been about them, the buyers. And if you start by looking at what the buyers need and how you get them interested and how you close the deals, then you're very successful. Okay, thanks so much, John. Good to meet you.
Thank you very much, Mike.
Cheers. Thanks for listening. If you enjoyed the show, please subscribe on iTunes or your podcast app, or sign up at londonfintechpodcast.com for email alerts of new episodes. Live long and prosper.
We could sit in a bender all day, watching the firelight dance, watching the firelight dance. We could walk in the mountains before dawn, watching a happy moonrise, watching a happy moonrise. Come away from the city, with the tarmac so dead and the people so sad. Come away from the city, with the faces so grey, with the pain of the everyday. We are wild like the mountains and the trees. Can you see what I mean? Can you see what I mean? We fit in between the earth and the sky. Kiss the city goodbye, wave the city goodbye, wave the city goodbye. The city goodbye. Watch the firelight dance with me. 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 Watch the firelight dance.